Ladies and gentlemen, Kim here. Welcome to the Daily Update. Hope you guys had a good day trading today. Market is up about 0.7% there. On the S&P Nasdaq up a little more, 1.5%. Semiconductor up, Dow up a little bit. Russell 2000 is a flat. Transport up about 1%. Banks and energy, these guys are red today. Biotech up 0.7% along with the healthcare. Home builders up, utilities up, retail up, emerging markets slightly up there. Bitcoin is up about 8% today. However, gold, silver, miners, that they did get hit today with the red prints here. Looks like 2% or more for these guys today. Dollar up, oil down heavily. Treasury bonds are slightly up there. VIX is down a little bit. Let's look at the S&P 500 ETF. Spider, 65-minute chart here. So this is where we close on Friday, and it looks like we opened up pretty much flat or slight gap down right here, and it looks like there's a little fluctuations on that first hour, and that was that micro-term pivot, and that was a level that it held, and bulls were not able to advance above that. Pretty much looks like more than half of today's session. It looks like we kind of came down with the two upper wicks right here, right? And then we saw that decline, but look at that micro-term moving average to capture and to catch that fall. That's a micro-term, 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 and micro-term. This is not a coincidence. This is not a mistake. This is not an accident. This is not a random occurrence. And that this is continually happening here. I can actually zoom out all the way back to, like, early month of this, this market price action. And you can see as soon as we got above my micro-term, and we've been talking about micro-term moving average pretty much the last 3 weeks straight, because this micro-term moving average, ladies and gentlemen, is a die-hard fan for the bulls. You can see right here. And it's kind of, I think, understanding these levels will help you, navigating this market, knowing that when these moving averages are rising like this, and sometimes we'll get slightly below it or something like that, but remember, the trajectory of these moving averages is more important than price slightly getting below or above, because we can now know that micro-term and the short-term benefit of the doubt goes to the buyers. And when the benefit of the doubt goes to the buyers, any kind of decline we face, right? You want to give benefit of the doubt that pullback, that decline will be met with next level of support. And these levels will kind of help you to guide through these up and down fluctuations, right? And so that was the second, third hour right here. And then through that, hammer like, more like a dragonfly doji there. That can be a reversal candle if it's met with a follow through. So you can see that that's a textbook dragonfly doji reversal. That's a red, that's doji, that's the follow through, or yes, follow through. And then that's the breakout. And then when that happened, we see that 5th hour and 6th hour rallies. And also that breakout level, that 452, keep in mind that level has been acting as that micro-term resistance last 2 days or so. So a lot of micro-term energy was kind of building up, and the bulls were kind of consolidating. You can look at this as some sort of pennant pattern, or bull pennant, or bull flagging pattern, which is known as a continuation pattern, right? That's probably a more flag, right? Market goes up, flags down, goes back up, and then we consolidate again, and then breaks out again, and then supported by the micro-term moving average along the way. So with this kind of price action today, what can we expect going into tomorrow and possibly this next, or this entire week? Back in March 17th, this was when the market, or that also hit that overbought level, extreme overbought level. And we also talked about on that video where when we do see this signal happening, it's actually a bullish signal. It's not a negative signal. It's showing us that there's a strength in this market. You guys remember that? Because there are times where it doesn't quite get there. There are many times where market doesn't quite get to all the way to the top of its band, right? And especially after, you know what I'm saying? Like it's been in this kind of a correctional phase in the last several months. After correctional phase and market gets up and hit that oscillator, the top of his band, we talked about how strong that is, and we could see, and then we kind of did a little back testing exercise, if you guys remember, and then we may see something similar, and then that's kind of what we're seeing today. So that's why, you know, these things are going to be very, very important to understand as the market kind of gets, you know, different mode, different environment, different conditions. So 460, remember we talked about the big bears, the boss bear, right? They are hanging out here, right? The small little bears, they're all dead after just relentless every single day up move we've seen since the middle of this month, and looks like we're going to continue that. Again, that's why momentum is very, very important. We talked about this momentum is definitely bigger than this momentum and this momentum. This momentum is a big. We put in the low and we put in the higher low. I think it would have been okay if the bears would have kind of got up here, maybe hit that moving average somewhere in that vicinity and brought it down and made a lower low. But I think once that base, see that breakout, right? I think once we saw that with that base and also my oscillator signal, also we talked about the bullish divergence on the daily chart and the pivot. I think there's a lot of that signal that telling us that bulls are getting ready, bears are kind of exhausted at this point, and then and then all the little bears are dead, and then all the big bears, the boss bears, retreated back to 460 level. And also talked about that down gap. Once this down gap was filled, that was it, right? This is how the buyers neutralize that power, right? Basically, this right here, this was actually the bears' real estate because that down gap was open, and for the longest time, it was giving bulls, very, very extreme, difficult environment. But once that gap got filled, and you can see it, we keep going higher, right? We're not seeing any kind of a big down moves from the bears. Again, because once that down gap was filled, big bears had to retreat to 460, all the small bears dead. And then with that, the environment is bulls are charging, right? So obviously it looks like, again, bulls are going to get up here and challenges this level. And this is a level that bears must protect if the bears wanna see. This is the only weapon bears have right now. Nothing is supporting the bears at this point. Remember, my micro-term moving average is a huge fan of the bulls. Remember my short-term moving average? Bears are really scared of my short-term moving average because last time when the bears had to deal with that short-term moving average, you know what happened, right? The mid-term moving average, right? The mid-term moving average has been a huge, big fan of the bears, and it was supporting the bears. Now it's kind of getting to neutral ground, but now the price is back above the mid-term moving average, and so we want to give benefit of the doubt to the buyers because now price staying above all of my moving averages, and then now it's going after that force. So only weapon the bears currently have is this gap. So buyers, you must fill this gap if you want to kill all the bears in this vicinity and go after new all-time highs. If you're a bear, you're a seller here, you want to see lower prices, you protect this level, you do not let the buyers fill this gap, bears can still bring it down and create hell for the buyers. Let's check out that oscillator and see if we can extract any more information. So we've been talking a lot about this triple peak bearish divergence, and I talked about how that triple peak bearish divergence isn't as strong. Well, look at that. I mean, bulls didn't even flinch. We couldn't even get below my micro-term moving average. So you see how it wasn't really, when we did see that kind of that clean bearish divergence right here, like the first, that's stronger than triple peak, right? Most people don't realize that. Once we saw that, actually, this was the first time in the last 2-3 weeks that price actually gotten below my micro-term moving average. So that did something. At least create just a little bit of fear right here, getting below the micro-term on that, peak to peak, lower high, bearish divergence, while the price made a, higher high, right? Now you can see we had a triple peak bearish divergence, which we talked about on Friday. They didn't do anything. That short micro-term moving average still holding. And we talked about that. This triple peak is not that strong. And so bulls just not even, bulls are right now, don't even care. Like they're like, okay, like I don't believe you, you're bluffing, you got nothing, so we're just gonna keep charging. So bulls already know there's nothing until 460, and that's what we've been talking about, right? So that's what's gonna happen. Like it or not, we're gonna get to near the 460. All the battle's gonna happen here in this vicinity. I'm gonna come back for you. We'll reassess the situation. Enjoy your evening and good trade tomorrow.